So let's talk about this adjustment in technology. And I'll tell you what I've been doing. When you see massive market cap names like Facebook completely implode, it starts to get interesting. I think that stock I've been starting to nibble on after the 27% correction. I think the stock could trade below $200 by the time this correction is over, because I'll tell you what's going on right now. As you know, I spend a lot of time talking to sovereign and pension plans. So I'm asking them, what's going on with your positioning on Facebook? Now, many people thought that Facebook was a stock that was owned by retail. It's not. The majority of the ownership of that were sovereign and pension plans. And so they had a full weighting in Facebook, up to 5 and 6% allocation. They're readjusting that down based on the new risk. They now see the risk in the Facebook business model. They're concerned about some of the policy changes for the metaverse, changed about issues around government regulation, whatever else you're concerned about. So all they're doing right now is reducing it from a 6% weighting, maybe down to 3 or 2. And that's going to continue on for a few more trading sessions, probably 3 or 4. But if you're prone to take positions in massive corrections, this is a wildly profitable company with billions and billions of users on its platform. It's still one of the world's largest advertising platforms. So I feel compelled, while this thing is bloodletting, which is basically what it's doing, to start putting on a position, and I have been doing that. Crypto is getting interesting again. You've seen this move up again on Bitcoin, but there's a new narrative coming into the market. Very interesting narrative at the institutional level. So one of the gravest concerns people have at the institutional level about Bitcoin mining is ESG. And you and I have talked about this before, but it's becoming far more in focus now. For example, if you actually are a Bitcoin miner and you're buying carbon credits to offset your dirty carbon emissions because you're using traditional electricity made by burning gas or burning coal, that's not cutting it anymore at the institutions, because they know with certainty that Bitcoin miners can be set up in hydroelectric zones where they can make Bitcoin mining where no one has to buy a carbon credit because there's no carbon involved. And so capital is starting to move in that direction. And so what you're seeing is institutions say, I'm going to sell the stock in, let's say, a Marathon or a Riot, any of these miners that are buying carbon credits, dump that stock, redeploy that capital into mining operations where they're located in hydro zones, northern Norway, northern Manitoba, northern Quebec, northern British Columbia, northern upstate New York, where all of these water resources provide an abundance of hydroelectricity, where a lot of it is not used or stored. Now you can turn that into stored value in Bitcoin mining. That's the direction that we're going, and that's where I'm putting my capital now. I'm selling off the dirty miners and investing in clean hydro-based mining.
You know, another interesting sector that's intertwined with crypto these days is esports. What are your thoughts? Is this a growing industry? Is it a bubble? Is it going to pop? Are you invested in it?
Yes, I am invested in it. I think there's a very interesting space, but the real direction of that is the metaverse. If you believe in the next 3 to 5 years, when things continue to move online, particularly experiential advertising, you're going to find that in the metaverse. But where? It's going to manifest itself in gaming first. And so we're going to see a lot of gaming happen. And I think, esports is a big part of that. I think this is the direction it's going in. Another reason you may want to think about Facebook, going back to that discipline, there's 2 directions of the metaverse. The unruled, uncurated metaverse, where you're a big brand, let's say Procter & Gamble, you could find yourself set up in the metaverse right beside a porn shop. That's not going to happen in Facebook, where they're going to curate the metaverse. That may have more value long term, because if I'm putting up a brand that I'm trying to protect, that means something to me, I don't want to put it up beside a liquor store maybe, or a porn shop, or whatever else is on the metaverse that's unregulated. Facebook probably will have the largest curated metaverse, maybe something to think about long term on that stock.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
I'm curious to see what the private sector, especially on the venture capital side, is doing in regards to the metaverse and the cryptocurrency space. I've been a fan of Shark Tank and Dragon's Den for many, many years. Cryptocurrencies is not something I've seen being pitched on a regular basis 10 years ago when I was watching their show as a student. What's happening these days? Are you seeing a lot more pitches in that space or not?
Yes, I am actually. And the way to look at it is it's no different than just software. If you're willing to buy, a Facebook or a Google or a Microsoft. That's all software. And the metaverse is just software. And so I'm starting to take positions in some of these big platforms where the metaverse is going to live, like in Polygon and HBAR and Ethereum, and even Bitcoin itself is just software. It's not a coin. And so I keep telling people, if you're willing to invest in traditional software as a service companies like a Microsoft, why aren't you investing in Ethereum? Why aren't you investing in Polygon and HBAR and Helium and all of these different platforms? So I've got a pretty wide selection of these different software platforms, not knowing which ones will be successful and which won't, but it's diversification.
Kevin, do people ever ask you, are you taking on excessive risk by buying into a sector that's basically unknown, we're untested so far? But now we're talking about the metaverse. It's a brand new technology. No one's seen it, at least in its full potential. No one knows exactly what it's going to look like or what form people are going to participate in. Are you taking a lot of risk right now?
You're right. It's a great question. I try and do diversity always. And so I have many different platforms, but you have to have a temperament for volatility. Just like Bitcoin, it traded down so much and then it traded back up. I mean, it's volatile. That's the problem with it. So you have to think about that when you're putting an allocation into it, understanding that the price variance on an annual basis is as much as 50% every 12 months. However, and I always use this example, having been a shareholder in Amazon for 17 years, for almost half of those 17 years, Amazon corrected from 38 to 55% each year. And people would always say, oh, it's over, Amazon's going to zero. Well, that's not what happened. Amazon is a behemoth today, and you've made tens of thousands % return. The same is going to happen in these different software platforms. So you've got to be able to stick with it and not try and time the market. I don't trade Bitcoin, I own it. It's an asset class. I make the assumption over time, because it's a scarce property, it will appreciate in value. And so that's the way I look at it. I don't mark to market every day, but you're right. The volatility is just nosebleed. The big question today is whether you can time the market. If you're feeling concerned about the Fed raising rates over the next, 2 to 3 quarters and how many times they'll do it and what raising they will, I'm going to speculate that they'll raise rates 25 basis points 3 times in a row until they can fix the supply chain problems. Because part of the reason we have inflation is broken supply chain. But, during times like this where there's lots of volatility, I tend to move up the feeding chain on quality. So I tend to buy and own companies that have really strong balance sheets that are spinning off dividends. Now, I think the opportunity in this year is to hide in the weeds with high quality, large cap names, not so much technology in the front end of the year, but because actually technology has not stopped growing and it provides so much productivity to the economy, I like the trade in the back end of the year. So I'm probably going to go back into it. I'm not adding to technology, but I still own it. But I'm overweighting the quality names, sort of hiding in the weeds for the next 2 quarters. And then the back end of this year, I think I'll be back with a full weighting of 22% in tech. But again, large cap tech companies. And that will include Facebook. I mean, Facebook is not going away. It's a behemoth.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.